Hey, what's going on, everybody? I'm going to shoot a quick market update. Sorry if there's any background noise. I'm at a baseball tournament, but I wanted to get you this data ASAP. So just to kick it off to see what's on the market here. Currently, we have 319 homes on the market, which is quite a bit above our 5-year average of 278. So that is a much different than the beginning of the year where we had suppressed inventory. Now we have an abundance of inventory. Just to go over what kind of inventory we got 166 singles on the market, 17 semis, 67 towns, and 69 condos. As you can see, almost all of them are over the 5-year averages. So just to take a look at where we were from last year. Last year at this time, we had 134 units on the market. We currently have 319, so we have 138% more homes on the market than we did last year. However, compared to our 5-year average, we only have 14% more homes than our 5-year average. As you may remember, last year we had a very suppressed inventory, which is very uncommon to have that low of inventory. So we're catching up to we've caught up to our 5-year average, and we're a bit above that. So there's some really interesting things to know here, and we'll go over them a little bit now. Listing inflow, so how many homes are coming to the market every single day. Currently, we are at 154 homes that came to the market in the month of July so far. So that is about 10.3 homes per day are coming to the market. So just to give you some contrast here, our daily 5-year average for homes coming into the market is 18.2. So we're 43% less homes coming to the market than we were on our 5-year average in July. And we're about 32% less than we were last year. This is not a bad thing. In my opinion, it's a good thing because we already have caught up our inventory. So inventory slowing down coming to the market is a good thing because, as you'll see on the next slide, there's almost no buyers in the marketplace right now. And the worst thing that can happen is listings continue to flow into the marketplace. So let me just show you where the outflow is. So currently our outflow is sitting at 55 homes sold. So that is only 3.7 homes sold a day. And that's quite dramatically low. To show you here on our 5-year average, we usually sell around 14.6 homes a day in the month of July. And last year we sold 13.9 homes per day. So as you can see, we're about 74% off of our 5-year average and from last year. So that's quite a significant drop in homes sold. Failed to sell, that is also taking some inventory off the market. As you can see here, we have 75 homes failed to sell. So on average, 5 homes per day are failing to sell. And as you remember in the last slide, it was under 4 homes are selling. So we have more homes failing to sell than actually selling. So this is a market that I've never seen before, and I'll show you the stats. I've been tracking the market for quite some time, and never has the failed home sales been inverted and such a dramatic drop in unit sales. So here we go. We have 5 homes sold. So based on our 5-year average, it's actually down because our 5-year average for the month of July is about 5.7 homes failed a day. So we're a little bit increased from there, but last year we were 3.6 homes failed per day. So we're about 40% more homes failing to sell than last year. Okay, so where are we at with other stats? So our days on market from 8 days on market in January all the way up to 18 days on market average. So the days on market every single month are getting higher and higher and higher. Sold price, list price to sale price ratio. So how much, if you listed for 100,000, are you getting above 100,000 or below 100,000? So for example, all year we were getting above our list price to sale price ratio of 100%. So for example, if you listed for 100,000, you're getting 112,000. In February, if you listed for 100,000, you're getting 120,000. And now for back-to-back months, we are below 100%. And actually we hit 95.9% list price to sale price ratio, which is one of the lowest list price to sale price ratios we have ever had. I'm looking through the data right now, and there's not really one month I can point out that pops out at me that is actually at that 95% list price to sale price ratio. So this might be the actual lowest list price to sale price ratio we've ever had. I'll have to double check that stat, but it looks to be true browsing through the data here. All right. What about our monthly average sale price? Okay, so you have to take this data with a grain of salt. We have to take it with a grain of salt because we only have 55 sales to report this number, right? So in a typical month, if you have 300 sales, those 300 homes will make up the average. Right now, we only have 55 homes making up the average. So that's going to be, it's going to sway quite dramatically if we get another 55 homes in the next 15 days. And if all those homes are above where they are, the average is right now, it'll dramatically influence. But nonetheless, let's take a look at it and take it with a grain of salt here. But this could become true at the end of the month. I think it is going to be true by the end of the month that we're going to be close to this number. So right now we're at $768,000 average sale price. So we're down 8.5% month over month. So from last month to this month, we're down 8.5%. So we dropped 8.5% in 1 month. And the year over year, we're still up 3.8%. But as you can see, it's a dramatic change. Year over year, in January, we were up 37%, 31%, and now we're only up 3.8%. So the market has dropped from the peak in April to today. We're down around 23.6%. Back in 2017, which I compared this year to quite often, we were down a max of 18% in that time. So essentially, we went peak, which was in April, to trough, which was in August, and that was an 18% drop. And here, from peak to trough, we are about 23.6%. I still feel pretty confident that since the market is accelerating down so quickly, with inflation being a lag indicator and always reporting a month behind, the hope is that the inflation reports start coming out a little bit positive, and the Fed will take it a little bit easier on the rate hikes moving forward, which should hopefully reboost some confidence into the market and bring some buyers back to the marketplace. I believe we should see that around September, hopefully October the latest, but we could see it as soon as August, just like we did in 2017. But the graph does look pretty concerning, and I'm going to go over that a little bit right here as well. So as you can see, just down here, as a visual representation here, we had a pretty significant gap between where we were last year and where we were this year, and now that gap has closed considerably, and we can see that we're still up, but we're right on the line right now. And if we have a similar trend next month where we continue to drop, we will be actually below where we were and actually have a declining year over year sale price to list price, sale price average. All right, let's keep going though. I'm not overly concerned about this yet because there's only 55 homes that are that have sold, and at the end of the month there could be quite a significant inflow. Sometimes that happens. Looking at the quarterly numbers here, 768,000, which is only 55 homes sold, right? So I wouldn't take this number into too much consideration because the 918,000 was over almost 900 sales, where this one's only around 55 sales. But right now, with that number, we're about 16% below quarter over quarter. Okay. To keep going here, some interesting stats here. Nothing really too much to cover here. On the annual basis, so taking every single unit that has sold so far this year, we're still at a list price to sale price ratio of 109%. We're still on an average sale price of $938,000, which is still 22% higher than we were last year. So the rest of the year really has to, keep following this trend, and then we'll essentially be, this number will come down a little bit more. I'm expecting this number to come down quite a bit still, but perfect. Let me just get into the comparison report here quick. And as you can see, the green line represents how many properties are flowing into the market a day, and the red is how many properties are flowing out of the market per day. What the orange and the blue line make up is the total outflow. So this red line is comprised of these two numbers here, the blue and the orange. As you can see, orange here is how many homes have sold per day, and the blue is how many homes failed to sell per day. So if we take a look at our total outflow, we can see that our outflow was made up of all sold homes in the first 2 to 3 months of the year. It was pretty much all homes selling. And now it's actually increasing failed sales. I've actually never seen a dramatic drop like this in actual homes sale and a sudden increase in homes failed to sell. And as you can see right now, we are failing to sell more homes than we are selling, which is making up this total outflow. So inflow and outflow, the more inflow we have and the less outflow we have will create a bigger gap in inventory. However, since we have such a significant outflow of failed sales, the inventory levels are staying pretty straight. What I kind of want to touch on here real quick on the failed sales here, it looks like the trend is coming down, right? So we were at no homes failing to sell, to the peak at 5.5. 5.8 was the peak, and now we're coming down to 5. So it looks like these people that are on the market that aren't really serious about selling are coming off the market, and there's less and less people that are failing to sell, which is nice to see. So hopefully the sellers that are on the market are serious about selling, and the buyers that are in the market are serious about buying. All right, let's take a look. So what's the recommendation at the current time? So if you're a buyer, it is good to be patient in this market. There's definitely some deals available where there's going to be some smart sellers out there that understand that they're going to need to get ahead of the falling knife, which is the market average sale price continuing to dip. So if you keep positioning yourself as a seller, so here's where the market's buying your house, and this is where you're listed at, and then you drop your list price, but then the market's going to accept less and less and less. You're just essentially chasing the market down, where the smart seller knows that homes always sell. As you can see, 55 homes sold this month so far. So it's not that there's no homes selling, but what the smart seller will do is, if this is where the market's going to absorb your house, you got to be listed essentially right here, right? So you want to be ahead of the knife, not on top of it, because you'll just keep chasing it down like this versus putting yourself here. You're going to catch it, right? So if you're serious about selling, you got to position yourself properly. If you need some expert advice on how to position yourself properly, I would highly recommend reaching out to us. We can show you exactly how to do that and help you have success in this market. All right, hope that was helpful, everybody. If you have any questions, please feel free to reach out and DM me. Appreciate it. Thanks.